In this book you will learn the making of an American capitalist. Buffett, The Making of an American Capitalist, provides an in-depth look at the life and career of Warren Buffett, one of the most renowned investors in the world. The book covers Buffett's early life in Omaha, his foray into trading at a young age, and his ascent to becoming one of the wealthiest individuals globally. Here are key insights from the book. 1. Early beginnings. Buffett made his first stock trade as a child. Even in his early years, he demonstrated an interest in investing and a knack for financial matters. 2. Investment philosophy. The book explores the investment philosophy that has influenced all of Buffett's investment decisions. Known for his value investing approach, Buffett seeks undervalued stocks with the potential for long-term growth. 3. Influence of Benjamin Graham. Benjamin Graham, a renowned economist and investor, had a significant impact on Buffett's investment philosophy. Graham's principles of value investing, focusing on intrinsic value and margin of safety, greatly influenced Buffett's approach. 4. Berkshire Hathaway. The book delves into Berkshire Hathaway, the conglomerate that became synonymous with Buffett. Initially a textile company, Berkshire Hathaway transformed into an investment vehicle under Buffett's leadership, acquiring a diverse range of businesses. 5. Long-term perspective. Buffett is known for his long-term perspective on investments. Instead of chasing short-term gains, he focuses on businesses with strong fundamentals and competitive advantages that can withstand the test of time. 6. Personal traits. The book explores Buffett's personal traits, including his humility, simplicity, and frugality. Despite his immense wealth, Buffett maintains a down-to-earth lifestyle, doing his own taxes and wearing modest attire. 7. Succession planning. The issue of succession planning within Berkshire Hathaway is discussed. Given Buffett's prominent role, the book looks at how the company has addressed the question of leadership transition. Buffett, The Making of an American Capitalist, provides readers with a comprehensive understanding of Warren Buffett's life, investment philosophy, and the evolution of Berkshire Hathaway, offering valuable insights into the mind of a legendary investor. Warren Buffett's early years. Lessons from the Great Depression. Warren Buffett, born on August 30, 1930, in Omaha, Nebraska, was deeply influenced by the economic challenges of the Great Depression. His father, Howard Buffett, lost his job as a securities salesman during the Depression, but he started his own business selling stocks and bonds, providing a valuable lesson in resilience for young Warren. Growing up in financially strained circumstances, Warren's family faced difficulties affording basic necessities. Despite the success of Howard's business when Warren was 6, the memories of the early years of struggle left a lasting impact on him, shaping his perspective on money and security. Warren's interest in finance and entrepreneurship emerged early. At the age of 10, he enjoyed visiting his father's office, and by 11, he made his first profit by trading stocks with his sister, Doris. To fund his early investments, Warren engaged in entrepreneurial ventures such as collecting lost golf balls and selling them back to the golf course owner. At 14, Warren managed 5 paper routes, displaying a strong work ethic and entrepreneurial spirit. Saving diligently, he was able to purchase 40 acres of land for $1,200 before turning 15, showcasing his financial acumen. Despite his focus on business, Warren excelled academically and graduated in the top 3% of his class. He furthered his education at the Wharton School of Finance and Commerce in Pennsylvania, where his passion for finance continued to flourish. These formative years set the stage for Warren Buffett's future success as a legendary investor. The early lessons of resilience, frugality, and entrepreneurship contributed to his unique approach to money and finance. Buffett's academic journey and mentorship with Benjamin Graham. Warren Buffett's pursuit of higher education led him to Columbia Business School after being rejected by Harvard Business School. This unexpected turn of events proved fortuitous as it brought him under the mentorship of economist Benjamin Graham, a pivotal figure in Buffett's investment career. At Columbia, Buffett maintained his academic excellence, earning straight A's. His encounter with Benjamin Graham, a renowned stock market analysis pioneer, was transformative. Graham's investment philosophy became the cornerstone of Buffett's approach to investing. Graham's philosophy focused on avoiding risky stocks by determining a company's intrinsic value and comparing it to its market value. Assessing intrinsic value required meticulous research into a company's assets, revenue streams, and future prospects. When intrinsic value exceeded market value, it signaled a safe investment, with the expectation that the stock price would eventually rise to align with the market value. Buffett embraced Graham's philosophy, and their relationship flourished during Buffett's time at Columbia and beyond. Buffett's dedication and aptitude for Graham's teachings earned him the distinction of being Graham's first A+ student in 22 years of teaching. Following his graduation, Buffett joined Graham Newman Corp., Graham's Wall Street investment firm. While some of Buffett's early proposals were initially rejected for perceived riskiness, he eventually became a star employee. One notable deal during his tenure involved a chocolate company facing a surge in cocoa prices in 1954. Buffett devised a strategy that allowed the company to benefit from the price increase by liquidating millions of pounds of cocoa and selling the beans to stockholders. This transaction, based on the price of cocoa futures, proved profitable for the company and Buffett alike. Buffett's return to Nebraska and entrepreneurial success at the age of 26, Warren Buffett decided to leave the fast-paced environment of New York City and return to his hometown of Omaha, Nebraska. His desire to provide a peaceful upbringing for his children in Omaha and his preference for a quieter lifestyle influenced this decision. Upon his return, Buffett founded his own investment partnership, Buffett Associates, Limited. Within a year, he successfully raised $500,000 from friends and family, utilizing Graham's investment principles to invest in undervalued companies. The results were impressive, with his initial $500,000 portfolio increasing by 10% in the first year and doubling in value by the end of the third year. Notably, Buffett consistently outperformed the Dow Jones Industrial Average. In 1961, Buffett took a significant step by acquiring controlling interest in a company. He invested $1 million from his partnership into Dempster Mill Manufacturing, a struggling windmill company. Despite skepticism from other investors, Buffett recognized its solid intrinsic value and became the chairman of the board. Through meticulous financial management, he turned the company around, and within a year, its stock was trading at twice the purchase price. By 1963, Buffett sold the company, realizing a substantial profit of $2.3 million for his partners. At the age of 35, his investment portfolio in 1965 was valued at $22 million, and his personal net worth approached $4 million. Buffett's entrepreneurial acumen and adherence to Graham's principles played a crucial role in his rapid success. Buffett and Berkshire Hathaway in 1962, Warren Buffett made a significant move by purchasing controlling interest in Berkshire Hathaway, a company that would later become synonymous with his name. At the time of Buffett's involvement, Berkshire Hathaway was a struggling textile manufacturer facing challenges from cheaper overseas competition. The stock was priced at $7.60 per share. Despite the company's dire situation, Buffett, through meticulous analysis of its intrinsic value, determined that it should be trading at $16.50 per share. Recognizing the extraordinary opportunity, he bought as many stocks as possible and eventually became the majority shareholder. While Berkshire Hathaway continued to struggle as a textile company, Buffett transformed it into a successful holding company for his other ventures. One notable addition was the acquisition of National Indemnity Company, an insurance company, in 1967 for $8.6 million. This move significantly contributed to Berkshire's profitability. By 1969, Berkshire Hathaway had become Buffett's primary focus, leading him to dissolve the original Omaha partnership that had grown from $500,000 to $104 million over 13 years. As the chairman of the board at Berkshire Hathaway, Buffett continued to expand its holdings, causing the price of Berkshire's shares to soar from $7.60 per share in 1962 to $95 per share in 1976. Buffett's growing reputation allowed him to fulfill a long-standing desire, owning a newspaper. In the 1970s, Berkshire Hathaway became the largest outside shareholder of The Washington Post, a newspaper with sentimental value to Buffett, as he had delivered it as a child. During this period, Buffett maintained his modest salary of $50,000 per year, reflecting his consistent approach to compensation. Buffett's wealth surge in the 1980s. During the late 1970s, Warren Buffett's wealth and the value of Berkshire Hathaway continued to grow impressively. In 1979, Buffett's net worth reached $140 million, and Berkshire's stock was valued at $290 per share, outperforming the Dow Jones Industrial Average. Entering the 1980s, Buffett's investment philosophy underwent a shift. His mentor, Ben Graham, had passed away, and Buffett moved away from focusing on small, undervalued companies. Instead, he started making significant investments in prominent businesses like The Washington Post and the insurance company Geico. While his approach evolved, the fundamental principles of assessing intrinsic value remained integral to his strategy. He expanded his evaluation to include not only a company's financial assets but also its entire brand. The economic landscape of the 1980s, marked by the policies of President Ronald Reagan, contributed to Buffett's wealth surge. Reagan's commitment to revitalizing the economy included interest rate cuts, making stocks more attractive to investors. The Dow soared to new highs, driven by a buying spree fueled by low interest rates. Berkshire Hathaway benefited significantly from this market environment. By the end of 1983, its shares were valued at $1,310, and the company's holdings reached $1.3 billion. Buffett's personal fortune also experienced a substantial increase during the 1980s. In just 4 years, from the early to mid-1980s, his net worth escalated from $140 million to $620 million. In 1985, with the continued boom in the markets, Buffett earned a spot on Forbes magazine's annual list of billionaires. Buffett's unique lifestyle and philanthropy. Warren Buffett, despite his immense wealth, has chosen to live a life that defies the typical image of a Wall Street billionaire. His choices reflect a commitment to modesty, social responsibility, and a rejection of elite-class distinctions. Buffett has maintained his residence in the same modest house he purchased for $31,500 at the age of 27. This decision, along with other aspects of his life, sets him apart from the stereotypical wealthy elite. Even in the 1960s, during an era of widespread segregation, Buffett took a principled stand by boycotting the local Rotary Club due to its refusal to accept non-white members. His stance on social issues and his rejection of elitism led him to become a Democrat, despite his father's lifelong affiliation with the Republican Party. Buffett has consistently spoken out against tax cuts for the rich, referring to them as welfare for the rich. This is noteworthy because such tax cuts would benefit him financially. He has advocated for fair taxation and has been vocal about the need for the wealthy to contribute their fair share. Contrary to the extravagant lifestyles often associated with billionaires, Buffett has lived a frugal life. He does not indulge in luxuries like expensive cars, lavish homes, or extravagant clothing. Furthermore, he has emphasized the importance of his children forging their own paths in life and earning their own livings, rather than relying on his success. In 2006, following the passing of his wife Susan, Buffett decided to allocate a significant portion of his wealth to philanthropy. 1/6 of his fortune went to various Buffett family foundations, and the remainder is planned to be gradually donated to the Bill and Melinda Gates Foundation. This foundation focuses on addressing global issues, particularly fighting disease in developing nations. Buffett's commitment to philanthropy, combined with his unique lifestyle choices, has solidified his legacy as one of history's greatest charitable donors. As of 2015, his net worth was $64 billion. Warren Buffett's wealth accumulation strategy. Warren Buffett's journey to becoming one of the wealthiest individuals in the world was shaped by the principles he learned from his mentor, Benjamin Graham. The key insight he gained was the distinction between a company's intrinsic value and its market price. Buffett's ability to discern this difference, coupled with a resolute resistance to following market trends and a profound understanding of numerical data, became the foundation for his immense financial success. His fortune, exceeding $66 billion, stands as a testament to the power of a disciplined investment strategy and a unique approach to wealth accumulation. Embark on this enriching journey of knowledge and inspiration with us. If the insights we've shared have sparked your curiosity and you crave more wisdom from impactful books, we invite you to champion our channel. Surprisingly, a considerable number of our fellow explorers haven't subscribed yet, so we warmly invite you to hit the like, share, and subscribe buttons. This ensures you stay connected with one of the foremost book summary channels online. Subscribing guarantees a constant flow of uplifting and thought-provoking summaries, keeping you engaged and inspired. Your support is not just appreciated, it's the cornerstone of our mission. In return, we commit to delivering consistently high-quality book summaries promptly. Let's persevere in this quest for growth and enlightenment together. Here's to joyful reading, continuous learning, and ongoing personal development.